Hey everyone, welcome back. We're doing a deep dive today into something I think is on a lot of people's minds.
hmm
Is this just a dip in the market, or are we headed for a full-blown crash?
Yeah.
And we've got this financial analysis report to help us figure that out. It's called
Oh,
Vente massive d'actions par les fonds et sentiment des investisseurs.
all right.
Don't worry, we'll break down all that fancy French and what it all means for you.
Yeah, it's definitely a timely topic. I mean, we've seen some pretty wild swings in the market lately, and a lot of folks are understandably on edge.
Yeah, absolutely. And it's not just, the average investor who's feeling a little uneasy right now, right?
Yeah.
This report actually points out that even hedge funds and those big investment firms, those guys.
Yeah, the so-called smart money.
Yeah, exactly. They seem to be spooked as well.
Yeah, hedge funds are interesting because, they have access to a lot of sophisticated tools and resources. They're supposed to be the ones who really know what's going on. So when they start making moves, it definitely catches people's attention.
And they are definitely making moves, according to this report. It seems like they're selling off stocks at a rate we haven't really seen before.
Right, like they're heading for the exits.
Yeah, exactly.
And the report specifically mentions that the NASDAQ and the Russell 2000, those are two key indexes. They've taken a pretty big hit. The NASDAQ is down 13.3%, and the Russell 2000 even more, down 19%.
Wow.
Yeah.
Those are not small numbers.
No, they're not.
And on top of all that, it also says that hedge funds are actually increasing their put options. Can you explain to our listeners what exactly is a put option? Why is that significant?
Yeah, so a put option is basically like a contract that gives you the right to sell a stock at a certain price within a certain time frame.
Right.
So it's a way to bet that the market is going to go down.
Okay.
And when hedge funds start buying up a bunch of put options, it kind of sends a signal that they're expecting things to get worse.
So it's like they're buying insurance against a market crash.
Exactly.
But that begs the question. If they're supposed to be so smart, shouldn't they have seen this coming already?
Right. Shouldn't they have been proactively hedging instead of reacting like this?
Exactly. So what's the deal here? I mean, does this shake your confidence in the smart money?
I mean, it definitely raises some eyebrows. The report actually quotes one market observer who says that hedge funds sound intelligent on the golf course, but their performance tells a different story.
Ouch. That's a little harsh, but I can see where they're coming
Oh,
from.
definitely something to think about.
Okay, so we got these big players making some interesting moves that are, causing some anxiety.
Yeah.
But to really figure out where the market might be headed, we need to consider another piece of the puzzle: investor sentiment.
Absolutely. Investor sentiment is really just the overall mood of the market, like how optimistic or pessimistic people are feeling about the future.
Right, and how does that play into all of this?
Well, this report talks about something called the AI investor sentiment indicator. And basically, this thing uses artificial intelligence to analyze tons of data, news articles, social media, even trading patterns.
Wow.
And it tries to gauge how investors are feeling overall.
Okay.
And what's interesting is that right now, this indicator is showing levels of bearishness that we haven't seen since the 2009 financial crisis.
Whoa, 2009. That's taking us back.
Yeah, it's not exactly a comforting comparison.
Not at all. But I'm curious, does all this doom and gloom maybe actually mean that things are about to turn around?
Well, it's funny you should say that because investor sentiment can sometimes be a contrarian indicator.
What does that mean?
Well, basically, when everyone is super pessimistic, it could actually signal that we're near a market bottom, like the pendulum has swung too far in one direction and it's about to swing back the other way.
Okay, so all this fear could actually be a good sign. I'm trying to stay optimistic here. Yeah. But how does this idea of a contrarian indicator line up with what actually happened in past market crashes?
Well, historically, market crashes last about 300 days on average, with an average decline of 32%.
Okay.
Right now, the S&P 500 is down about 10%.
Gotcha.
So we could be in what's called a correction phase rather than a full-blown crash.
So what's the difference between a correction and a crash?
A correction is a short-term decline, usually about 14%, followed by a recovery period of about 4 months.
So maybe we already hit bottom back in March and we're on our way back up.
It's possible, but even if we are just in a correction phase, there's still this whole tariff situation looming over everything.
Oh, yeah, the tariffs. I keep hearing about tariffs on champagne and wine, and I'm thinking, well, that's not great. But there's something bigger going on here.
Yeah. You know what? The report suggests that these tariffs could actually be part of a larger strategy.
Really? Like what?
Well, one interpretation is that they're a way to pressure the Federal Reserve into cutting interest rates.
Okay, now I'm intrigued. How would tariffs pressure the Fed?
So basically, by creating market volatility and economic weakness, the tariffs could force the Fed's hand. You see, historically, when the economy starts to slow down, the Fed often responds by cutting interest rates to try and stimulate growth.
Okay, so that's the connection. But for our listener out there who's thinking, okay, interest rates, what does that even mean for me?
Well, lower interest rates mean it's cheaper to borrow money, right?
Yeah.
So for everyday people, that could mean lower interest rates on things like mortgages, car loans, even credit cards.
Yeah, that puts more money back in your pocket each month.
Exactly. But before we all get too excited about a potential rate cut party, we have to consider another really important factor that could affect the economy:
Okay, what's that?
consumer confidence.
Right. Because even if interest rates go down, people might not be willing to spend if they're feeling uncertain about the future.
Exactly. And this is where things get a little concerning because the report says that consumer confidence is actually declining pretty sharply. Sales growth in some sectors is down 26% year over year.
26%.
Wow.
Okay, so what's driving this decline? Is it the tariffs? Is it the market volatility? Or is there something else going on?
Well, it seems to be a combination of things. The tariffs are definitely playing a role, especially in areas like retail. But the report also points to some other unexpected factors like unseasonably cold weather. Apparently, that's impacting sales of things like footwear.
So you're telling me that my decision to wait until spring to buy new sandals is actually contributing to a potential economic downturn?
Well, maybe not your sandal buying decisions specifically, but the overall trend is definitely something to keep an eye on. When consumers start to tighten their belts, it can have a ripple effect throughout the entire economy.
Yeah, less money for sandals equals less money for everything else. Yikes.
Ah.
Okay, this is getting a little heavy. Before we spiral into an economic existential crisis, maybe we should shift gears and talk about something a little more uplifting.
Sounds like a plan. Maybe it's time to explore some potential opportunities within all this volatility.
Okay, I'm ready for some good news. Are there any bright spots amidst all this economic uncertainty?
Absolutely. Even in a turbulent market, there are always companies and sectors that stand out. And this report highlights a few specific stocks that might be of interest to our listeners.
Okay, I'm all ears. Hit me with the good stuff. What are these potential hidden gems?
Well, the first one that kind of jumps out is Celsius Holdings,
Okay,
ticker symbol CELH.
gotcha.
And, despite the overall market weakness, Celsius has actually been holding its own,
Mm,
which suggests, pretty strong investor confidence.
okay.
And the report seems to think it could be poised for a pretty significant rebound when the market recovers.
Celsius, the energy drink company, right?
That's right, yeah.
Okay, that makes sense.
Mm.
I mean, even if the market crashes, people are still going to need their caffeine fix, right?
Exactly.
Okay, so what else is on the list?
All right, so the next one is maybe a bit more of a gamble. It's RH, which stands for Restoration Hardware.
Gotcha.
And it's actually trading pretty close to like multi-year lows right now. So that could be a buying opportunity for someone who's, maybe got a higher risk tolerance.
Okay.
But the report also mentions that bankruptcy risk is a real concern
Oh.
due to some questionable management decisions.
All right, so high reward, potential high risk as well.
Exactly.
Definitely something to research carefully.
Okay.
Okay, what about something a little less volatile? Something for the more cautious investor out there.
Yeah, sure. If you're looking for something a bit more stable, PayPal might be worth a look.
PayPal.
Ticker symbol PYPL.
Gotcha.
It's down quite a bit from its highs, but the report suggests it's looking pretty attractive at these levels.
Okay.
Especially if the Russell 2000, we talked about that earlier,
Yeah.
if that stabilizes.
I mean, PayPal, everybody uses PayPal.
Yeah, it's almost like digital cash these days.
Yeah, it makes sense.
Yeah.
I can see why that would be a pretty good bet in a shaky market.
Yeah, definitely a household name.
Okay. What else is catching your eye?
Well, for investors who are thinking long-term, Shopify remains a solid choice.
Shopify. Okay.
Ticker symbol SHSHOP.
Gotcha.
It's considered like a long-term growth story, and it's consistently popular among investors who aren't so worried about those, short-term market swings.
Shopify, the e-commerce platform. Yeah, that one's been on my radar too. I mean, it definitely seems like they're not going anywhere anytime soon.
Yeah, they're definitely a force to be reckoned with in the digital world.
Okay, so what if our listener is feeling a little adventurous?
Okay.
Are there any high risk, high reward plays out there, for someone who's feeling lucky?
Yeah, of course, the report does mention a couple speculative plays that might be interesting to those who are comfortable with a little more risk.
Okay.
There's SoFi,
SoFi, all
a
right.
ticker symbol SOFI,
Mm-hmm.
and then Red Rock Resorts,
Okay.
ticker symbol RRR.
Got that.
These are considered a bit riskier, you know,
Yeah.
but they also offer the potential for those big returns, especially if interest rates do decline, as we were talking about earlier.
All right, so we've got a nice mix here.
Celsius, PayPal, or Shopify for those who like to play it safe.
Mm-hmm.
And then RH SoFi or Red Rock Resorts for those who are feeling a little bit lucky.
Right.
But before anyone rushes out to buy any of these stocks, I think we need to add a little disclaimer here.
Oh, absolutely. Yeah, we are not offering financial advice here.
Right.
This is just, us exploring some potential opportunities based on what we're seeing in this report.
Exactly.
It's really important for everybody to do their own research.
Yes.
Consider their own risk tolerance,
Mm-hmm.
and maybe even talk to a financial advisor before making any investment decisions.
Exactly. We're just trying to get you thinking, not telling you what to do with your hard-earned money.
Right.
Okay, so to recap, what have we learned today about this crazy market ride we're on?
Well, we've seen that the so-called smart money, the hedge funds, are making some moves that are definitely raising some eyebrows.
Right.
Investor sentiment is super low, at levels we haven't seen since the financial crisis.
Yeah.
Tariffs are adding a whole other layer of complexity to the mix.
Yeah. And consumer confidence is a little shaky, which could have a bigger impact on the economy down the road.
Right.
But even with all that uncertainty, there are still potential opportunities out there for those who know where to look.
It's like navigating a jungle out there.
Yeah.
But with the right map and a little bit of courage, you might just find some treasure.
That's a great way to put it. Yeah. Market volatility can be scary.
Mm-hmm.
But it's important to remember that markets are cyclical.
Right.
This deep dive has given you a snapshot of the current landscape, but now it's up to you to do your own research, consider your own risk tolerance, and make informed decisions.
Keep learning. Stay curious, and remember, the best investment you can make is in your own knowledge.
Couldn't have said it better myself.
Yeah.
And on that note, I'll leave it with one final thought.
Okay.
We've talked a lot about these external factors that are influencing the market. Hedge funds, investor sentiment, tariffs, consumer confidence.
Right.
But there's another really crucial element at play here that we haven't explicitly addressed.
Fear.
Fear. Yeah. Fear can be a powerful motivator in the market.
Yeah.
It can drive both, irrational exuberance and panic selling.
Yeah, it's funny because, when we talk about, these market crashes and corrections,
Yeah.
we always focus on the big picture stuff like interest rates and global trade and those, crazy charts that only Wall Street wizards can understand.
Right.
But you're absolutely right. I mean, fear plays a huge role in how we react as individual investors.
Oh, for sure. And sometimes that fear can lead us to make some pretty impulsive decisions, decisions that aren't really in our best interests.
Yeah, like we might sell everything off at a loss because we're so afraid of losing even more.
Exactly. Or we might miss out on a great buying opportunity because we're too scared to jump back in.
Right. It's like that saying, fear is a great motivator, but a terrible advisor.
Yeah.
So how do we find that balance? How do we acknowledge that fear is there, but not let it completely control us?
Well, I think a big part of it is having a plan. Before you even invest a single dollar, take some time to really think about what are your financial goals? What's your risk tolerance? What's your time horizon? How long are you planning to invest for?
So basically know yourself.
Exactly.
And what you're comfortable with.
Mm-hmm.
Don't just blindly follow the crowd or make decisions based on emotion.
Right. And when the market does get bumpy, and it will inevitably get bumpy at some point, try to focus on the fundamentals.
Okay.
Remind yourself that these ups and downs are normal.
Yeah.
And that over the long term, the market tends to trend upwards.
It's like riding a roller coaster.
Yeah.
There can be ups and downs, twists and turns.
Right.
But if you just keep your eyes on the horizon, and trust that the ride will eventually come to an end, you'll be all right.
I like that analogy. And remember, information is your best ally, Stay informed about what's going on in the market, Keep up with economic indicators and do your research on the companies that you're investing in.
Right. The more you know, the less scary it is.
Exactly.
So for our listener out there who might be feeling a little overwhelmed by all this market talk,
Yeah.
what's the one key takeaway you want them to remember?
Don't let fear paralyze you.
Oh.
Do your research, make a plan, and invest wisely.
Solid advice.
And remember, market volatility is just part of the journey.
Yeah.
It's how we navigate those bumps in the road that really determines our success as investors.
Yeah, absolutely. Well, this has been an incredibly insightful deep dive into the current market climate.
Yeah.
Thanks for sharing your expertise with us and helping us make sense of all this.
My pleasure. Always happy to help.
And to our listeners out there, thanks for joining us on this journey.
Yeah.
We hope you got some valuable insights out of this and maybe even some ideas for your own investment strategy.
Definitely.
So remember, stay curious, stay informed, and never stop learning. We'll catch you on our next deep dive.